Hello everybody, Real Estate Ninja here. Hope you're doing well. Got some news out of Housing Wire. It is about Freddie Mac, and Freddie Mac is rolling out standardized mortgage documents for DPA programs. Now, why this is important is because very few people understand what's going on with Freddie Mac and possibly, I believe, Fannie Mae. See, what happened was one of Freddie Mac's old CEOs started with another company. And that company, I'm completely blanking on the name, I just did a video about it, but I'm live, of course, was just caught being a little, we're gonna find out in about 4 months, I brought that news story, a little not transparent or truthful about the creditworthiness of the borrowers. All right. So what Freddie Mac immediately did is they started an inquiry and they are looking into how bad this is. Now, this is exactly like what happened in the Great Recession, the mortgage-backed securities fiasco, the salting of good credit scores on the top of these massive tranches of mortgage-backed securities. It's exactly the exact same thing that's happening right now. As the mortgage market is melting down, the real estate market is melting down, we need to start seeing all of the signs of what's going on. So this may sound and we're gonna read the story, real vanilla, real on the top, it's a good thing, but there's a reason why. It's because everything in the background with Fannie Mae and Freddie Mac is falling apart because there are a lot of people not paying on their mortgages and they should never been loaned the money in the first place, okay? So they're starting with DPA programs. We're gonna talk about what that is, but people need to understand what's going on in the background. With that being said, I put out a handful, 5 discount links or 80% off of a package of 3 real estate courses, how to prepare today for the coming real estate crash that we're already starting in, but how you can start and buy a house or buy tons of rentals during this crash. And I give you step-by-step instructions, and we're already seeing massive success in that course. So if you want the 80% off links, there's 5 of them down below, okay? Here we go. Out of Housing Wire, Freddie Mac announces standardized mortgage documents for DPA programs. It says Freddie Mac rolled out standardized subordinate lien documents for subordinate mortgages offered by down payment assistance or DPA providers to facilitate easier and greater use of the DPA program. That's not it. See, what they're doing is they're making these standardized documents with the information that they need to be able to ensure that they are buying the paper, the loans from these other lenders. And they're buying this paper knowing that certain parameters need to be met so that they are insured enough or they are the right type of borrower, right? Here we go. Historically, subordinate lien documents for various DPA programs have been housing finance agency specific and worded differently, leaving room for confusion when interpreting terms and payment plans. That's very vanilla wordage for we've had, because of a lack of communication in the past and currently, banks send us paper that they'd loaned money to people for homes under this program that should never have been loaned money in the first place, whether they had falsified their employment status, their income to debt ratios were not correct. There's a slew of reasons, but that's really what's going on here, okay? They say, and this is a quote, saving for a down payment continues to be the largest barrier to home ownership for lower income and first-time buyers, said Danny Gardner, single-family senior vice president of mission and community engagement at Freddie Mac. Well, that's a big no-duh from the Real Estate Ninja. As homes get more expensive, not only the cost of the home, but the interest associated with it, the taxes, insurance, and so on, of course, it's harder to get people to be able to get together that larger payment, right? But the thing is what really is important is what's going on behind the scenes with Freddie Mac. He says, he goes on, by embracing standardization and creating a set of industry-wide documents, we are providing clarity and consistency that will enable more lenders to help more individuals and families leverage down payment assistance programs across country. Okay, that's, wipe all that away. That's actually not the reason. The reason is because Freddie Mac is looking into the fact that they bought paper from other lenders that did not meet their requirements for government-backed mortgages. Let me explain this in a really easy way for people that don't understand. Okay, so you got a bank. You go to a bank, let's say Wells Fargo. Wells Fargo, you look at the mortgage expert and you're like, hey, I'd like to buy a home. Like, okay, so well, let me see all your stuff, like your how much you got for down payment, what bank account's it in, what's your work history, what's your credit score, and what, oh, of course, what house do you want, right? And you give them all that information. They go, okay, look, here's the deal. Based off of your information, you qualify for a handful or maybe just one program. And let's say that one program that you qualify for is a government-backed FHA loan or a Fannie Freddie government conforming loan, right? Which means it's backed by the government, and the bank wants that because they're going to, in sometimes cases, it costs a little bit more in interest rates, but you can get in for a lesser down payment, right? But the bank loves that because that means that they get to sell you that loan, they get the money to sell you the loan, the cost, the upfront costs, and then they get to sell it off to Freddie or Fannie. Well, the problem with that is because there's no standardized rules, really, and now it's falling apart, Wells Fargo may look at your ratios, and the underwriter at Wells Fargo looks at it and goes, okay, it's good. They sell it to you, they get you in that house, and then they go to sell it to Fannie and Freddie. They don't look at it because it's bundled in big old tranches, a big tranche of, tons of mortgages, and they don't see that. Well, it's all falling apart right now, and that news is going to come out 4 months from now. You're going to see it, and you're like, whoa, wait a minute, hold on, the Real Estate Ninja was already talking about this. Well, it's because it's already happening. I don't remember the name of the bank offhand. It's a big bank, and you wouldn't know about it because it's essentially a third party. They bundle these loans and they move them onto the government's books, and they were falsifying information. So they've been completely shut off. They can't make any more loans. And so right now, this is one of the reactions, and they're gonna, of course, they start with the whole, what's it called? I'm blanking out. Not the HFA, but the DPAs, right? The down payment assistance programs, because that pulls on the heartstrings of people, and they make it look really good. But what's happening is everything's falling apart in the background. They said the standardized mortgage documents complement the National Council of State Housing Agencies (HFA) or Affordable Homeownership Lender Toolkit online resource, which enables mortgage lenders to partner more efficiently with state HFAs in providing mortgage loan and down payment assistance to lower income home buyers. The online tools developed by the NC, I hate all these acronyms, GZO, NC blah, 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 and 23 of its member state HFAs identify the key features of HFA home ownership programs that are the most important to lenders in determining how and where to partner with the agencies. Again, that just means how and where to partner with the agencies. Like, where's Wells Fargo going to dump this loan off on? Are they going to dump it off on another bank, on a big lender, or maybe a mutual fund or a REIT, right? Are they going to dump it into that? Or are they going to sell it to a government agency like Fannie or Freddie, all right? So that's all that means. The standardization, they say, will also help increase the number of lenders interested in participating in the DPA programs. That's absolutely not true. This is what Freddy Mac added. No, it's not. Because see, what's happening is there are so few people that actually can qualify for a home that is overly inflated in price, let alone all the other payments that are associated with home ownership in comparison to the standard person's operating income, how much they make. Okay, this is exactly the fraud that occurred, especially in the what is it? The payment assistance programs. So the pay option programs, the NEGAM loans, negative amortization loan programs that happened in 2004 to 2006. Okay, people need to realize this is exactly happening over again. This is an amazing cycle. This opportunity is worth a lot more. It's a bigger opportunity because our national debt, our consumer debts, being student debts and credit card debts and auto debts, are so much worse this time, which means this is such a better opportunity to be ready for this next real estate crash. But this is the truth. Now it says, Freddie Mac standardized mortgage documents launch follows the agency's rollout of a down payment assistant tool in October. DPA 1 streamlines the available state programs in a single source that lenders can use to find and compare programs with their borrowers. The truth is, if they're constantly lowering the bar, it means there's nobody that has money for homes, and the psychology of the buyer has flipped, which means the crash is right around the corner, but it's already started. There are so many gurus out there that are completely moronic. Let me give you one. I saw a tweet go out the other day from Grant Cardone, Mr. 10X. Let me just say what he said. He sent a tweet that said how amazing it is this day and age that they being lenders, lowered the requirements to buy a fourplex to a down payment of 5%. Who would have ever thought that it was that easy to buy a $100,000 fourplex for a mere $5,000 down? Let me explain something to you. These gurus are so disconnected, and that is a fact. He's probably going to want to sue me for this because he does that kind of stuff. But here's the truth. You are totally disconnected from reality when you don't realize that you could buy a fourplex for 5%, and even sometimes, based on where it's located, USDA loans, for less than 5%, for the last 3 decades. But that's what happens when you only deal with 10x billion-dollar properties, okay? So if that's what you need for the clickbait, I don't know what to tell you. Nothing changed. That has not been lowered. Type 1 if you agree. There's people that they're totally disconnected with reality. But hey, you know, more power to you. You've used other people's money to make money. That's what I did when I'm small time, you know. But the thing is if you're doing it in the wrong cycle, and like Grant wants you to do, he says, if you don't have $1 million, you're worthless. Well, guess what? I'm going to tell you the total opposite. I'm going to say, if you got $1 in your pocket and you're coming down in debt, tomorrow you're going to have $2, and then you're going to have $3. Don't let somebody put you down. I don't give a crap. I mean, that's all he talks about. If you're not a millionaire, you're worthless. I'm like, no, you're pretty much worthless as a motivational speaker, Grant. This is the time to get excited. You know, there are so many people that look at the glass half empty when it comes to finance and owning a home. And the one way to level up, and I teach this in my course, is you level up when everybody's chips are down, when they're out of chips. You take advantage of their, not misfortune, their misguidance and their miscalculation. You try and warn everyone you can. That's what I do for free on YouTube all the time. But at a certain point, you got to grab the people that are serious about it and go, here, this is how you do it. I'm going to show you how to do it. If you guys want, I put 5 links down below to the how to prepare for the real estate crash course. I have people that have bought their first home and never believed they could even do it. And there are deals out there. I just talked to a student that bought his first rental, bought it properly with the right rent ratios, and has a plan for if that thing got cut in half of value and he lost a renter, he's still got a plan on how he's going to absolutely crush it. That's what I want to see. I hope you have a great day. Fannie and Freddie, they're in trouble. You'll find out in 4 months. But you heard it from the ninja first. The Real Estate Ninja is out.